It is 9:27. We'll go on paper here. It is 9:27. We are 3 minutes from the open. On the 15-minute time frame, we're trading down here now. I don't really like anything because this swing leg here, we've already exhausted so much in price. For me to be really interested in anything, I'm looking at this price leg here. If we were to create a swing low, so there's some buy side above that high. There's buy side above this swing high. Very unlikely, but it would be nice if it could come to this buy side liquidity. That would be very interesting because that would be running all of this liquidity. But right now, we're so extended lower, nothing looks too favorable for me because I'm looking at it this swing high to this swing low. Premium is up here because I want to be shorting where the market is not in a discount relative to this price like swing here. Premium is up here, this box here. This is where I really would want price, but it's looking like that may be unrealistic for this morning because it's just so high up. I'm gonna go to an hourly chart. That would be the best, but I don't think that's gonna happen. So I'm gonna try to work. If it can offer me any of these levels here, I would still be interested in that. So that's the 15-minute time frame. Again, that's pretty quick. It's just looking at premium versus discount and where's the liquidity. Swing high, swing high, swing high. And this is on a 15-minute chart. So let's go down to a 1 minute. Market opens in 2 seconds. I prefer if it came up first. That's just what I want to see. I don't want to see it extend lower because that just really takes away my interest in any trades. And why is that? Because let's go back up to a 15. If it trades lower first, it's just really exhausting this move lower. And because now we're in the time for price to move, it's important what it does first. If it trades lower, a little bit of sell side here. That's something I would be looking for if price went up first, and then a delivery into that, not a delivery into this first. I wouldn't want to be looking for a move up here because it's just against everything that's going on in the marketplace right now. Now, what does that mean? Well, looking at the order flow here, it wants to go lower. Meaning I'm looking at, for example, here, I can measure all these up close candles here. Price comes up. Look at the midpoint of this. Doesn't even reach it. That's heavy. That's showing you an unwillingness to want to seek buy side liquidity, basically. Because these are order blocks here. All this cluster, if you move, it may not look like it on a 15-minute chart, but if I go up to like a 3-hour, let's see. All this is one, that up close candle here. That's an order block. That up close candle here, coming up, midpoint, reject. But I can see that order block on the 15-minute time frame. It's just those clustering of up close candles. Again, there's a swing high here. This would be buy side. But since you can't see that as a swing high on the 15-minute chart, I wouldn't be too excited about it coming up and poking that because the majority of the liquidity is above this high here. So now I'm literally doing nothing because I can do nothing until it takes out some of these liquidity points. So right now I'm just looking at price, could not care what it does, could not care until it only reaches this level, and the time limit for that is between 10 o'clock. If it does it after 10 o'clock, I would be a lot more cautious about taking trades. And if it doesn't do it by 10 o'clock, I do nothing. It's as easy as that. It's going to be a nice delivery. I might want to take out these lows here, but that's not something I'm trading. It's just way too low of a time frame. This is a 1-second chart. If it respects these up close candles, it may attack this low and then maybe that low and that low. So what I'm studying is just these up close candles. And this is what I'm doing if I want to be taking a trade. I'm looking at these up close candles as order blocks. And if price wants to seek lower, it has to respect this order block, especially the midpoint. You don't even want to see a trade up to the midpoint. If it's heavy, that's what you want to see. Same thing as, there you go, there's an inefficiency. Midpoint, boom, no bodies. But once you see a body like that, that's like a warning sign. It can come up and step through it because there's up close candles here. So that can be permissible because this is higher up in premium. That's the stuff I want to be measuring. Is price still showing me that willingness that it wants to seek lower prices? Once I start saying that those warning signs, what are warning signs? Well, disrespecting the PD arrays, showing bodies where there shouldn't be. If this inefficiency was higher in premium, maybe this one here, if it closed the body above that midpoint like it did here, that would be a warning sign for me. But because this is such a discount and then it's reaching up into a higher premium based on this price like here, even on a 1-second chart, it's all the same thing. It's reaching up into that order block, but this is showing really nice bearish order flow to take out that low. I want to show you something. So you see all these like relative equal highs here that I wanted to see it take out to a 15-minute chart. So see all these relative equal, just these highs I wanted to take out. So boom, see this price leg here? Price leg. I wanted those highs. Never came up to it. Now look at that. Don't even think about me changing a time frame. Don't think about it. Oh, well, this looks similar. Doesn't that kind of look like that? Here's your high, and there's your price leg. Boom! That's what I want to see on the 15-minute chart. Strong move up to take out buy-side liquidity. Going up into the inefficiencies here. Let's go to 3-minute. Clear inefficiency. Boom, goes up to midpoint, no bodies. And then I'll be going to a lower time frame and looking at order blocks, which is what I just kind of showcased here earlier. So that same thing I would be looking for, but on a 15 chart. It's just on a higher scale, I guess. So everything you saw on that 1-minute chart, that's what I was expecting, or at least wanting to see it come up, take up some sort of buy side. But like I said, I was very hesitant to see it because that takes a lot to do that, and I didn't think they had it in it. And now it's 9:40 almost, so I wouldn't. What it's done here, this is the move I was looking for, really. But because it really happened on the 1-second chart, I wouldn't be trading that. Even though I see the trade there, I'm not doing that. Because that's not what I originally was my plan for. My plan was the price is up here. So this is sometimes what happens. You have to just let trades go. Because time's now passing, you're getting closer to 10 o'clock. And because I see what it's already done here, I'm really not interested in anything today. And I wouldn't want to be risking my own account size or prop firm balance on anything now because I know that the move basically already occurred. Again, nothing in here is a trade anymore. There's nothing to do here. If you were to short here, that is a horrible short because you're at risk for price coming retracing into you and maybe just simply coming to this up close candle, which is an order block, and continuing lower. You have to have these things framed based on premium and discount off a price leg. It's just there's so many things that have to go into a trade setup, which make it high probability of price expanding away from your entry price, because that's what you want. The first 30 minutes of trading, it's coming close to an end. This is a lot. This swing coming up and going up into that 15-minute swing low, that's a lot. Post 10 o'clock, I think it's going to do a whole lot of nothing. It might retrace a bit, maybe to this up close candle, and just bounce around and I guess consolidate, really do nothing. I don't want to be trading in that. I would never want to be trading in that because I want the time where the market is ripe and allowed to move, and that's that first 30 minutes. That's when these trades occur. That's the time. It's basically you're looking at what is it doing first. If it already did this first, I would not expect anything else really to happen anymore because there's really only going to be one good trade in that 30 minutes. There's not going to be 2 or 3. It's going to be one. This was the one right here. That swing up, taking that buy side on the 1 minute and lower. But that's not what I was looking for. I like framing it off the 15-minute chart because I like trading on the 5-second chart. And because I need a higher time frame premise of liquidity. And so I was looking at these swing highs. But like I said, price was already so extended and heavy. I was just doubtful of any energy to come up and take any of these highs here. And it just did it on a really small scale. Came up, took some 1-minute buy sides, inefficiency on the 3-minute order blocks, and just delivered. And the only way if I wanted to trade it with the detail that I need, this is a 1-second chart. If I were to trade this time frame, where would I trade? Or where would I enter? I'm looking for a price leg and respect of order blocks. Let's just go through it, everything without skipping. So this is a price leg. Comes up, any respect? Nope. Goes straight through up. Okay, price leg. Does it respect really any order blocks? No, this is a really small price leg. I wouldn't even want to touch that, but not really. No. That is a really, really ugly price leg because you have no clear inefficiencies. It's more so consolidation than anything. And that's not just picking and choosing. There's a clear contrast between a price leg like this and something like that. This is what you want. A price leg that explodes lower. Boom. I would now immediately grade that. And then what do we have here? I see this little up close candle. I would maybe put that forward to see if it wants to use it. There's a clear inefficiency here. Let's go up to a 5-second chart. All right, so here's that price leg on the 5-second chart. Again, another inefficiency here. Comes up, doesn't even get close to the midpoint. Just a wick. boom, rejects. That wouldn't be an entry for me, but that's like, that would boost my confidence. Like, okay, this is heavy. Perfect. Trades lower. Another price leg. Now, what is a price leg? It's just really a swing high and a swing low. Like this. Boom. That's just a leg of price. It's a price leg. Same thing. You have premium discount. Always with a fib, you have premium discount. So that's premium because it's above the midpoint here. Trades up. Now, because I saw everything here and I saw that sensitivity to price, and because of the higher time frame, liquidity, inefficiency, that's why I'm looking for shorts. And time. I see these up close candles, comes up the opening price of the candle. That's what we do. You always want to mark out the opening price. Well, you don't have to mark it out, but just as a rule of thumb, the opening price can be sensitive. It's either an opening price or the midpoint. The midpoint would be here. Comes up, respects it. There's an inefficiency here. Boom, comes up. Look at the body. Does not trade up above the midpoint. Just a wick. That's fine. Trade lower. At this candle here, once I saw all of that happen here, with this inefficiency here, these order blocks, the body not coming up to the midpoint, and then trading lower, any of these candles here, I'd be going short. This one, or this one of those. Anywhere here, I'd be going short. And putting my stop above that high, or maybe above this high, and then just seeking sell side. This low, or this low. But really, I should be doing all my work on the 1 second chart because all of this was derived from a 1 minute chart. But me personally, all this stuff works on every time frame. But me personally, I don't trade the 1 second chart. But everything is the same logic on all time frames. It doesn't matter what you're on. It's all the same logic. Even on a 1 second chart, look at that, the body. Never comes up to close above that midpoint. That is exactly what you look for because this is order flow. This is real order flow. And it comes up and it takes up that sell side. Now it's one thing to just talk about it after. But again, it's not hard to do this real time because the logic just doesn't change. If my 15-minute chart came up and took any of these buy sides, the exact same thing would occur on my 5-second chart execution time frame. But it just happened on a smaller scale here, which was not what I was looking for. That was not my plan. So that's not an execution for me. Nor do I even want to seek these kind of trades because they're not. Because it could do that. It could look like a short and then just pump up quickly, taking up those highs there, and then doing the real move of the first 30 minutes of trading. But it's still the same logic performing. This inefficiency from a 3-minute chart. See that? Let's go to a 1-minute chart. Look at the bodies of the candle. They're hugging that midpoint, but they're not coming above. And then boom, rejecting. So again, that midpoint is always so important. If it's order blocks or fair value gaps, it doesn't matter. That midpoint is always going to tell you a lot. And you coming closer to 10 o'clock. So at 10 o'clock, I would expect some kind of retracement back up into the range. Some sort of retracement or consolidation. Because that's what we expect. Because that's the time that we're expecting that type of price action. Whereas in the first 30 minutes, we're expecting movement. Because that's the time for movement. And the 10 o'clock is usually a consolidation. Because that's the time for consolidation. All right, getting close to, it's 10 o'clock already. So sooner or later, I'm expecting some sort of retracement, something of the sort. I would expect price to start getting a little quote unquote uglier now. Not so loose and free like you see here where it's just completely exploring lower prices. At the bare minimum, I think price can retrace up into all these up close candles here. I mean, really, I'd want to see it maybe come up, take that swing high there, at least trade up into these up close candles, and maybe eventually take this buy side before 11 o'clock. But expecting some kind of retracement. Why? Because it's 10 o'clock. That's the characteristic that brings consolidation, retracement, something to go against what happened in the first 30 minutes. And just for clarification, this would never be a buy. And never. Because you're going against a big, if you want to think about it, like a big train moving at 100 miles per hour. It's going down. You never want to be on the opposite side of that. I wouldn't, at least. But again, I'm looking for some sort of retracement. Bare minimum these order blocks. Now, I'm saying this not because I'm looking for a trade, but because I know this is what is characteristic to happen right now. Because it's time to expect that. I'm looking at this down close candle. Does it want to use this as to send a price higher to this low here? Again, I'm looking at that midpoint. Does it want to just leave the wick, or does it open here trades lower, takes out that low and lay a body. You could use this down close candle here as an order block to send price just above and into all these up close candles here. When this happens, that's my warning sign. See how there's a body and in that lower half now? Now I gotta see, does it still respect it? Come back up and close above it, or does it close below the line there, that midpoint? Right now it's still closing above that midpoint, but I need to see it exploding away from it. I don't wanna see it stay there a long time. And now this up close candle here, I wanna see it close a body above that midpoint there to support it coming up to all these up close candles here, and specifically that at least that low there. So see how there's a body above this up close candles midpoint? Now I want to see it close there and it start shifting higher, going up into these up close candles here, and maybe taking out buy side liquidity there. So again, down close candle here, here's that midpoint. Look at the bodies. Do they come up, or do they come down, sorry, and close below that midpoint? Well, no. That's what I'm looking for. If it closed below it, that's my warning sign. Okay, it's going to come for that low and start or continue trading lower at least. But here is that retracement taken out, minor buy side, expecting at least to dig into that. Again, nothing what I'm saying here would be something I would trade. This is me just reading price and understanding at least what it's trying to do and where it's trying to go and how it's going to get there because of what time it is. So here's that low delivered now. From here, it could do literally anything. It could come up, do something like that, and just continue trading lower for these lows here. It could come up, leave a body, or just come up to the midpoint, trade it away. It could come up, lay a body above the midpoint, come up for the buy side here. It could do anything here, but the minimum framework of what I was expecting was that retracement up into these up close candles here. But because it's 10 o'clock, but it's also heavy, it could do anything. I don't know anymore until I need more information to see, is it going to respect? Is it going to come up to that level, respect it, or is it going to break right through it? Is it going to leave a bunch of wicks in here, start trading lower to come for those lows there? Right now, I'm neutral. I'm looking what price is doing and how it's respecting all of this here. If it closes above this midpoint, I think it's going to go for that buy side. Well, it's a pretty strong candidate now. Oh, it's coming. There we go. Just measuring price and seeing what it's going to do next. None of it would be a trade for me, though, because my trading is limited to the first 30 minutes, because that's when my accuracy is the highest. Because, like I said, time is the first element to price delivery. There you go. There's that retracement I was talking about. And expecting it at what time? After 10 o'clock. There's 10 o'clock. There's that retracement. I think that sell side could be next objective, honestly. So something like this, I'd be measuring as a price leg. Does it want to come up into premium here for an entry? Could stay heavy and never even give me the opportunity to get in and just come in and attack these lows here. But I have to be strict with my rules. It has to come up to a premium and show me that respect of these up close candles here. But I think the next extension in price is going to be pachow, something like that. I could see this as a price swing here. If it could come up and go into these order blocks here, I'd be interested for an entry. But it's looking like it's really heavy. See all that accumulation in there? I'd be going short there. My orders could get in. My stop above there, and I'm hunting these lows. So now I'd be measuring everything which price should be respecting if we're seeking lower prices. So all these clustering of up close candles here, I'm measuring that as one big order block, and then every inefficiency that's close to a premium, I'd want it to respect it and just completely start trading away, like we see here. Partials, you always want to take partials below old lows. Minor sell side, relative equal lows. This is all liquidity. So partial here, and then partial below that low, and then full terminus is down there. And this is on a 5-second chart. Oh, that was 3 contracts. I meant to do 1. Yikes. I'll have to remove a partial. The first partial here was 3 contracts. I meant to do 1. I thought I changed it. Anyways, okay, so here I'm looking at this inefficiency. Is it respecting it? That midpoint, I was looking at that midpoint. See the wicks here? I like that. Once it does this, a body, I'm looking at what's higher, these up close candles here. So I need it to respect that and not and be very sensitive to that midpoint if it trades up into that. But this is what I like. I like it coming up with the wick here. And really the line in the sand is always going to be that midpoint there. And I'm watching that. See how it comes up, just touches it, starts trading lower. I'm looking for this sell side here, that minor short-term low there, and start digging up into my partials. We have these relative equal lows here, so this is going to be liquidity, sell side. See how it's digging back up into that again. So I'm looking at all these up close candles here again. I'm looking at the sensitivity. What is it doing? I'm always measuring price, and we can move our stop to break even to reduce risk. There's that midpoint. I'm always looking at it, and I'm always looking at what's also available in this price leg. Well, we have this inefficiency here, could be influential. So we're digging up into it. Over here, there's that midpoint. Now I'm looking, where are the bodies closing? That's what I'm looking at. Where's the midpoint? Right there. Did the bodies close above the midpoint or below the midpoint? Below the midpoint. So that continues, that's continuous feedback for you to measure, is price still seeking lower prices? That's what you're looking for. So now I'm waiting for this short-term low to be taken out there. Okay, took that short-term low. Remember, we have now all these relative equal lows down here. So that's also liquidity. Now once price starts kind of retracing like that, I'm always looking at the key levels. What are we doing? Now we have a candle closure above that midpoint. That would be a warning sign for me. Doesn't mean it's not going to continue trading lower, but that's a warning sign that it could come up and take like a high here to have a deeper retracement into maybe these up close candles here. That could happen. Now it came up and touched the low of that, but a big line in the sand would be this midpoint here. If it closes above that, it could come up for my stop. So again, a big line in the sand is that midpoint. If we get a candle closure above that, I think it'll come for my stop. Okay, candle closure above, I think my stop's going to be hit now. So now, if I wanted to seek profits, I'd be closing immediately right now after the up close candle to secure whatever profit is still there. Doesn't mean it can't come up and still trade lower, but now I think that the market could have shifted and start seeking buy side. What's buy side? I think this, anything here, it could be a retracement to something higher. Doesn't mean that all these lows won't be taken out, but something like this here, those are warning signs for me to start either taking some of the position off or moving my stop to break even, something to protect the position. There's a small up close candle here, and there you go. So now buy side doesn't mean that it still can't come down, but just the way I was positioned, it retraced into my entry. So now I'm watching this midpoint, and again, we banked some partials there. We lost no money, and we banked I think 2 partials, so we got out 4 contracts, but we still hit some profits there. But that's what I'm doing. That's all that I'm trying to do. It's not to be right, it's to be profitable and be able to take something out of the marketplace in terms of dollars. So now I'm measuring up all this cluster of price here. Does it start respecting and trading lower, or does it come up and leave a body above the midpoint? If it starts respecting price in here and starts trading lower, I think that all of this is still in play. So now we're trading above it, and we basically laid a body above that. So again, it's not showing me that it's weak. It's showing me that it wants higher prices. So we have buy side there. There you go. Having a deep retracement if it still wants to trade lower. All right, let's clean up our charts again. We have this price leg here. I'm going to measure that. We are now up in a premium. That's what I like. What else do we have available? There's a volume imbalance there. So we have this inefficiency here. Does it start respecting it? Well, right now it doesn't look like it. So it's laying bodies above. It hasn't closed yet, but it's looking pretty strong here. So once I see so I was trying to frame this as a short, but since I see this here, see how it's not respecting that midpoint at all. It trade above it, so it could come up and take that high. So I would be not interested in shorts anymore. If it was to respect it, I would be all over that shit trying to short it. But look at that. That's your warning sign. Nope, not interested in shorts. So I think that buy side is the next target. Well, could be the next target rather. There's that 1 minute fair value gap on a 15-second chart. See how it laid a body above that? That's my indicator that it doesn't want to go lower. It wants to go higher. But now see how it created this fair value gap on, oh boy. See how it created this fair value gap on a 15-second chart? Look at that midpoint. Came down, wick, no body below it, respecting it. That's, to me, indicating what? Bullishness. Swing high, swing high, swing high. See how it traded below? Reached for what? this down close candle here, order block. What's the midpoint of the order block? Right here, no bodies. Boom, rejects completely higher. Once it starts clustering like this, it honestly becomes pretty ugly. You never really want to see that. You want to see smooth price like that, where down close candle, respect, down close candle, respect, trades higher. All right, now it starts disrespecting what I was framing, so now I'm going to reframe everything. Now we've created a price leg lower. Now I'm measuring this price leg. I'm looking at premium, touched it, moved away, but I'm not really interested in that. I always like a deeper premium, so if it would take this swing high here, that'd be nice. And again, I'm just framing something short term for these lows or that low there, because now it showed me an unwillingness how it trade right through that, that order block, that fair value gap. Now we have bodies below it. It's going to start seeking lower prices. There's that sell side there. Here's some up close candles, so that's something I would be measuring. And that midpoint there, does it stay heavy and come out to take that low there? So I guess really what I'm trying to emphasize here is it's not about what you want the markets to do. It's about reading the candlesticks and seeing what it wants to do, which direction. Is it respecting or disrespecting? Does it want to seek higher prices or lower prices? And then once you see something to frame that, then you start measuring all of the PD arrays to see, does it continue to show you support of that idea? And that's where you can frame your trades. But like I said, we're all inside 10 o'clock now. What is it doing? This is really what people would call consolidation. But you can still see how you can still measure all of this and how it's going to turn and start seeking the opposite sides. This is a hard environment to trade in because of what time. It's past 10 o'clock. What do you expect from 10 o'clock to 11 o'clock consolidation? What is the time to trade? The first 30 minutes. See, so I hope you can kind of see the pieces coming together here. And there's that low there. We have another relative equal. I already took it. But this is a little more advanced. But if you had a position all the way up here, you could measure the opposite price leg and see this as all a discount and start liquidating your positions here. And anything below a low, you'd want to start liquidating, because price could just want to not even take that low out, that original low, and just come into a discount. So from this price leg, it came out, traded lower. Nothing here would be really an entry for me. But if you were to go short, you'd want to be liquidating your positions here, because it could start either start respecting and completely just shifting lower for sell side liquidity there, or it could have a retracement. So it's a lot of parts to everything here. I'm trying to keep it as simple as I can. But again, up close candles you're measuring. Does it still respect the underlying bias that we're looking for lower prices? So there's the sell side there. And you tell me, are the candlesticks, whenever traced here, did it come above or did it stay below? Is there a wick or a body from that midpoint? Well, it didn't even reach it. What's that? What is that indicative of? That's indicative of heaviness, that it wants to continue seeking lower prices. Continued taking below that low. If I had a position on, that low could be a partial for me. There's relative equal lows here, so that would be another partial for me if I were short. And of course, terminus would be that swing low there. So we have another series of up close candles here, constantly measuring. Is price still heavy? Is it showing warning signs that it wants to start reversing its direction and start seeking buy side? What is it doing? That's all I'm measuring, because I don't know what it's going to do until it shows me what it's going to do. That's the secret. So from this candle, we still had that wick, but now we laid a body above. That's my warning sign. Doesn't mean it won't come up and just continue lower, but that's a warning sign for me that it could start coming up and taking short-term highs. Short-term high. Because it laid a body above that midpoint. So if I was in a position, I would either close it while it's either priced down here before it does something like that. Now it could just come up, take that buy side there. We're still inside a higher time frame order blocks, so there would be another line in the sand there, because it could just do that, take that buy side to take that liquidity and then continue lower for that low there. Again, this is what it looks like on a 1 minute chart, but see how it just becomes a little uglier after 10 o'clock? That's what I mean. This is not the environment I like trading in. Man, these lows look strong, I'm telling you. Just waiting for it. There's that first one, and full terminus is down here. If this were like a 15-minute chart, if you were to look at what you see right here, this would be buy side, and then I'd be going short in this price leg here, because everything you see on one time frame, it's all the same thing. So like if this were a 15-minute chart, this would be buy side, up close candles, order block, respect, trading lower, and then everything I'm showing you here, I'd be doing it just on a smaller scale and taking out a partial at that short-term low. This inefficiency, I'd be scaling out. But yeah, sell side, and then there's our terminus there. Stuff like this, I hate when I start seeing it, because now it's looking like a consolidation, and yeah, stuff like that could happen once it starts kind of doing that and not respecting levels. Again, my final line in the send here is just that midpoint. If it closes above it, I'm done. If it respects it and goes lower, then I'm done. It's whatever it does here. But all of this is more than enough. This is just final terminus. You would have so many partials here. So many. Again, I don't like how it traded above that midpoint. It's starting to become ugly. This is the type of environment you don't want to be trading it, where it's like retracing and it kind of looks ugly and you're kind of scared of it reversing from this high all the way like this. All of this is really nice up until that low there that formed. Then it started consolidating. Now it's retracing. This is like the final stage of a trade position, where you'd already be break even and you're indifferent if it either goes and stops you out or still has the juice and to come up and clean up all of the sell side liquidity here. So we got sell side, and then final target sell side. This is now just ugly. I hate everything about this. But again, same logic, measuring up close candles in the midpoint. Does it continue having that strength? Well, here it didn't come close to that, so I think it's still heavy. Short-term lows, sell side, sell side, sell side, sell side. So this would be like my belief up until it shows me something different. What would be something different? Well, if it started to not respect any of this stuff here, which I've pointed out. But I don't know if you ever heard of high resistance versus low resistance liquidity runs. This is all high resistance. This is not what you want to be trading in. All of this is low resistance. That's what you want to be trading in. All of this is annoying. Is really what it is. Because it's a lot of retracing, a lot of looking like it'll go in the other direction, but still it's still respecting the levels. It's just taking a lot longer for it to deliver, which is just annoying and not the conditions that you want to be trading in. But then again, this is the final stage of delivery here into sell side. So this is what it looks like on a 1 minute chart. We're still within the higher context. We're still inside these up close candles here on the 1 minute chart. So we're working within all of that. See what I mean? In high resistance, it's a lot of back and forth, back and forth, back and forth. To me, that is just annoying and takes a great deal of mental capital, where you don't have to do all that when low resistance liquidity runs like these exist. So there's a stark contrast between that. So we took out that short-term low, that'd be sell side. If I still had multiple contracts on, that would be a partial right there, because that's a good price. And now it's retracing on you. That's why short-term lows are always good areas for taking something off, taking profits, reducing risk, because stuff like this can happen. And we're not here to be right, we're here to be profitable, we're here to make money and take something out of the marketplace. So yeah, now it's doing all this. Like, this is just ugly. I just want to turn it off here. This is, nothing about this is precise, nothing about it is what I'm looking for. This is characteristic of a high resistance liquidity run. Still can come below and clean all of this up, but again, it's just taking a great deal of time, just a lot of time to do that, to deliver it. Be measuring that. Again, look at that. Just completely goes through it. Doesn't respect anything. It's just ugly. Just completely retracing and going against. Let's refresh our canvas here. Came out to take buy side liquidity. On a lower time frame, I'm looking at it creating price lags to show lower prices. I don't see that right now. And again, sell side is still here. So these up close candles here, I'd be measuring that and its midpoint. Does it respect it? Still came above it, but came below the midpoint. Laid a body below it. But now we just laid a body above it. Just ugly. Which is characteristic of a high resistance liquidity run. But because of what time it is, look how it's literally 11 o'clock. Anything after 10:30 is just ugly. 10:30, you'll always notice that it starts transitioning and phasing out the precision in price. which is why I always say time is the most important factor in trading, especially that first 30 minutes. That will always be your sweet spot. That will always be the time, because everything else you can start getting mixed up, messed up, because the characteristic of the time is consolidation. And here's now 11 o'clock. I would be done. Anything here, anything that happens after 11 o'clock is, I could care less. I could care less. It could create the most beautiful trade, or it could not. But time will always be the first factor in my trading and looking at charts. And so yeah, that was really it for today. Really just reading the tape, not trying to take crazy trades. Sticking to my rules. Remember initially we had that 15-minute chart where I was looking at if we had the willingness to come up to any buy-side liquidity. That didn't happen. Happened on a smaller scale. Was not interested in that because I'm not interested in trading a 1-second chart. And yeah, there you go. That's really it for today. That'll be it. Thank you if you watched to the end. Have a good one.